It's been a pretty seismic couple of days with news from Russia of a mobilization of hundreds of thousands of troops in what's being interpreted as a game-changing escalation of the war in Ukraine. Oil yesterday jumped as President Putin was delivering his address and also threatening a nuclear war again, but fell back later as the second act of the day's drama unfolded. The Fed unveiling a third consecutive 75 basis points increase and the promise of more to come. The Fed coupled that with a gloomy forecast on the economic front, with US recession now guaranteed and the only debate about how severe it would be. But oil bounced back above the $90 level this morning in early trading to what some people see as a comfort level. Let me go first to Dr. Carol Nackley, CEO of Crystal Energy. Nice to see you again, Carol. We will talk about the Fed moves in detail a bit later, I promise you. But for now, let me ask you about the Russia-Ukraine situation and where that leaves Russian oil. Because if Putin is really going all out here, mobilizing the Russian economy to support a war against Ukraine and the West, how can Russia go on being a reliable oil exporter? Doesn't a wider and longer war change the game completely in the global oil industry?
Good morning, Frank. Good morning, everyone. It's good to be back again on the program. Well, look, let me start with the last bit of your question about Russia risking losing its reliability as an energy supplier, oil and gas supplier. I think it lost it a while ago. I think it lost it from the beginning of this year, if not earlier. Because what they did was using their oil and gas as a political weapon, particularly gas, shutting down supplies of gas to European countries. One can say, yes, this is in retaliation to sanctions, fine, but it doesn't take away the fact that they are willing to use their energy supplies as a political weapon, and they are using it. So that by itself sends warning sign to any potential customer. Just imagine if you were in India or even more so in China. Are you going to put great trust in Russia? I don't think so. What we're seeing now is just a marriage of convenience, but I think Russia has lost its appeal in the long term as a reliable supplier. What happened yesterday was the announcement about Putin mobilizing troops. It just means actually that the war is unlikely to end anytime soon, unless there is a ceasefire. Nobody knows, but so far it tells us that it could be an escalation. But what worried me more is the hint that he made to Russia not bluffing about using its nuclear weapons. And that's what got Western powers worried. We heard President Biden highlighting that in particular, because really nobody can win from a nuclear war. And that is more concerning than the mobilization. But the mobilization of how do you call them, reservists is going to cause more concerns and discontent among the Russian people, as we saw some protests. But I doubt they would go as far as toppling the regime or stopping the regime from pursuing its plans in Ukraine. So far, the picture doesn't look nice in Ukraine or in Russia.
Right. On the point about him bluffing, somebody made the point yesterday that when you say I'm not bluffing, that means you are bluffing. The
risk is there, right? I wouldn't want to joke or play this kind of Russian roulette with somebody who has nuclear weapons.
No, absolutely. But my question was more directed to the fact that if Russia is mobilizing on a war footing, then that means, less investment, less labor able to run the oil industry. And we'll see a pretty dramatic fall off in its oil production and export capacities very soon.
The investment has been falling long before this decision yesterday, right? So if you look at the beginning of the war, many Western companies left the country because they didn't want to be connected with it. And that's the problem. So Russia at the moment, for many, they see it as winning because they are benefiting from high prices, oil and gas prices. They did not experience the loss of production that was predicted or forecasted at the beginning of the war. If you recall, the IEA was even talking about first 1 million, then 3 million, other were talking about 5 million. That has not materialized. So the real problem with Russia is not maybe today. In the longer term, because investment has been declining. And for us to see the impact on investment on production, we have to wait a little bit longer, because production today is a result of investment that had been that was undertaken many years ago. So we have to wait a bit longer to see this implications on Russian oil production. But I have no doubt that Russia is going to be the bigger loser in the longer term.
Let's go to India, to Vibhuti Garg, who is an energy economist and lead for India at the Institute for Energy Economics and Financial Analysis over in Delhi. Vibhuti, welcome. It's your first time on the show, I believe. So welcome. Staying on the theme of Russia, the Indian Prime Minister Narendra Modi had some very pointed things to say to Vladimir Putin last week when they met in Uzbekistan. But what do you think he'd be saying to him now in the light of the escalation that we saw yesterday? You know, quite a dramatic escalation. What would Prime Minister Modi be saying to Putin now?
It's very unfortunate that, you know, the two countries have been at war since February, and we were hoping that the situation would ease out, but it's only getting escalated, you know, every now and then. With the prevalence scenario, I would feel, though, while India kind of, you know, benefited with discounted oil imports from Russia, because India is importing more than 85% of its oil need from imports. So I think that's huge. But at the same time, given the sensitivity around these, you know, the impact of war, which has impacted not only countries which are importing, because we are seeing inflation, you know, being one of the big areas of worry for all the government across different geographies, you know, because of the war, which has led to energy crisis, as I said, across geographies. And in this situation, I would feel that while India maintains good relationship with all the countries, including Russia, we do hope India can convince Russia to ease off its stand and, you know, move more towards peace rather than escalating the war, and especially definitely not using nuclear weapons as a threat.
Okay. Well, one way to possibly convince Russia to move to more peaceful means might be to stop buying Russian oil.
One of the issues which I've raised, you know, that inflation has been hitting hard on all the countries, and India has been no exception. So we have seen consumer price index currently now hovering around 7%, which is much higher than your 6% benchmark rate, you know, of comfort. And the wholesale price index hit around 15% in the last few weeks, and now it's around 12.5%. So what India has been saying that, you know, it's only because of commercial reasons. So even now, while the Russian imports have gone up, but still it's, I mean, it was at 9th position, and now it's the 3rd largest importer of oil for Indian situation. But still, if you compare the imports for India versus what's being imported in Europe, it's still very small amount. So I think collectively, all the countries will have to put that pressure. And India alone, while the imports have gone up, is nowhere in terms of the overall dynamics. Yes, we play out.
I get it. So the commercial imperative is all important at the moment for India. Let me go over to Walter Simpson, Managing Director of CC Energy Development in Oman, just down the road from where I am in Dubai. A long road, but just down the road anyway. Walter, hello. Welcome. OPEC, including the big producers, Saudi Arabia and UAE, have been pretty stalwart in their support of Putin since the invasion in February, haven't they? There was an interesting story in the Wall Street Journal just a few days ago talking about a big increase in imports from Russia by Middle East countries, including Saudi Arabia and the UAE in particular. against that background, does the escalation of yesterday go in any way to make them change their minds, to get off the neutrality fence that they've been sitting on since February, do you think?
Interesting question. My gut feeling is no. I think the neutrality fence is very important to them because look, the purpose of OPEC Plus was to keep the price up, to keep revenues coming into the OPEC countries and make sure that those fiscal deficits were corrected. That's been very successful. And I don't think they're going to go away from that. And they're trying to keep the politics out of that, keeping a relationship with the Russians and Putin in order to be able to keep those prices up and keep that control of the market, so to speak. Now, there's always going to be some nuances around that, market share, selling oil at a discount, all of those things. But fundamentally, at the high level, I think it's always going to remain important for them to keep that broad control over what OPEC Plus does.
Right, and the fact that Russia, as we discussed, seems to be becoming a lame duck in terms of oil production, that doesn't make them such a big variable within OPEC Plus that the whole thing starts to fall apart, does it?
That is a risk, certainly, that could happen as things move forward. You look at the situation in Ukraine, the uncertainty of it. I mean, Putin can't afford to lose from a personal perspective. So I think the escalation announced yesterday is a reflection of that rather than anything else. He's got to keep his personal position. Russian oil production is challenged, certainly by the sanctions, but B, investment in it. But that's not untrue for a lot of places, despite all the problems that Russia has at present. There are lots of places where there is not that investment in the oil and gas business that's needed to keep production levels up. So I think there is the complication of Putin's position and the war in Ukraine, but fundamentally, I think there's underlying issues that says actually we still need to keep OPEC Plus aligned as best as we possibly can, and they're not going to give up on that easily.
Okay. Carol, just as almost as an aside, the German Chancellor is in the Middle East this coming weekend. In Saudi Arabia, Saudi, Qatar, and the UAE. To talk about a broad range of things, but we have to assume that he wants more gas from them. Will he get that, do you think?
Well, for Germany, Germany is not in an enviable position because they are the biggest reliant country in terms of, or at least they were until recently, but they are still, I think, on Russian gas volume-wise. So in that respect, if Germany announces that they want to actually abolish their dependence on Russian gas by 2024, they need to work hard to find the replacement of that gas. And it's not easy because Germany does not have LNG terminals. It relies on pipeline network. Yes, it's connected to neighboring countries as well, but it needs to have its own ports of LNG. And so far they announced they want to have temporary 5 floating importing LNG facilities, and then they will have 2 permanent ones that will come on stream in the coming years. But the first of these floating, the FSRUs, should start getting gas at the end of the year. So they are working hard on having the infrastructure in place, but they need to get the gas from somewhere. And for a while now, we heard that Germany has been in talks with Qatar in particular for LNG. And there was some kind of disagreement between the parties because Germany wanted to have, short-term contracts, just a temporary supply to get them by. But of course, Qatar was asking for longer-term commitment, and they would like to see more oil coming to the market, of course, like everybody else. But before I conclude this part, I want to go back to the question of India, and I put it in the chat room, by the way, that we look at India and China buying more oil from Russia, and therefore they are only looking at their own economic interest. I think consumers in Europe, consumers in the US are also benefiting from this reallocation of the trade flow. Because of that, we have the prices did not shot up to the levels that were originally expected when the war started. So in that respect, we should only look at the volumes going to India and China. We should also look at the price effect, which is also benefiting other consumers around the world.
Okay, I get it. So that's keeping prices down for the rest of us.
That's the way I see it.
Okay, good point. Let's move on to the Fed moves yesterday. All the commentary this morning was about the potential damage to the US economy and to US markets, equities, real estate in particular, from the latest round of interest rate rises and the prospect of more. Carol, what's your dot plot telling you? Jay Powell said that no one knows if there will be a recession or how bad it will be, but it seems pretty certain now that there will be. But what's your view on the severity and duration of a downturn? And put that in the context of global oil demand as well, would you?
Yeah, I mean, for the Fed, what we saw yesterday, first of all, it wasn't a big surprise because you were expecting that, but actually it was the tone and how the market kind of reacted to the tone that the Fed is pretty determined to bring the inflation down to their own targets, irrespective of what the pain is going to be. So they have to get the job done, even if it's going to hurt. And when you look at their forecast for unemployment, you can see that the recession is going to happen. So it's not like it is maybe yes, maybe no. It seems to be the solution that one needs to get to in order to tame inflation. And the Fed is not going to slow down in terms of tightening. It's also rising its interest rate. So that's we had this kind of strong message coming from the Fed. But we also, I don't know, I mean, there were some kind of, if you want, some misinterpretation, because it did not say that we are going to do this for sure, but they said we are prepared to do that. And that makes a difference, because that
means to keep on increasing.
Exactly. So keep on increasing the interest rates. So they are not saying that we are for sure going to do it, but we are prepared to maintain course and maintain the severity of our action, if you want, if that is needed to tame inflation, irrespective of the impact on the economic outlook, whether recession or not, because they need to get the job done.
Vibhuti, India has been enjoying some of the highest growth rates in the world, hasn't it? But how does it fare in a situation where the US, Europe, and maybe China are facing a very uncertain outlook, even recession? How can India survive through that when the rest of the world is going downwards?
Yes, you are right. India has had 8.7% GDP growth in the financial year 2021-22, and we are predicting that in this financial year, the GDP growth, which is the gross domestic product growth, will be around 7%. And that is primarily on account of, while, we have been struggling, there has been issue of inflation, and like US Fed rates, even within India, we have seen interest rates rising up. That's another inflation strategy which the Ministry of Finance in India has also adopted. And we have seen the rates going up, making borrowing more expensive, and controlling money supply. Again, some of the measures that are taken again to control inflation. But we are still banking on very high growth, just on the account of there is huge domestic manufacturing capacities that is being built. And one of the big, I would say, sectors that are being touted to be developed in India is on clean energy fuels. So India is betting big on renewable energy, and not only for power plants, but also across the value chain. So there has been a lot of schemes which the government has initiated to boost manufacturing activities in India, to bring more startups. And with that kind of a certainty, we are seeing large inflow of funds, not only from the domestic financial institution, but globally as well, because still Indian market offers them much better returns, despite having increased interest rates in US and other parts of the world. But still, if you look the gap between their interest rate versus Indian economy and Indian market definitely offers still much higher return, and a lot of money is flowing in, and a lot of manufacturing activity is building up, and that's where the government sees huge growth going forward. And definitely India has a huge population to cater to, and there is definitely efforts being taken to build more economic activities to cater to such high population growth rate.
Okay, interesting. Walter, I guess you could put the same kind of question about the Middle East, couldn't you? Because so far, the region has been, an oasis of growth, even stability, hasn't it? In a troubled economic world. I saw figures yesterday saying that Saudi non-oil exports were up by 26% in July. 26%. I'm not sure what they were, but surely that kind of thing can't go on forever in a situation of escalating global war and recession. So how does the Gulf navigate through this?
Good question, Frank. Look, I think it's quite interesting that we've got huge volatility on both sides of the equation. So you've got the demand side. We're almost certainly heading into a recession, and even if we're not, we're looking at one of the weakest world economies for the last 10 to 15 years if you park COVID in the coming year. So real huge uncertainty about demand. Both with the war in Ukraine, with the impact that has on supply chains, with the inflation, with the fact that almost every central bank is, as Carol said, geared towards we're going to up interest rates to get inflation down, and if that causes a recession, that's a price we're prepared to pay. So all of that is going on the demand side, and yet on the supply side, there's equal uncertainty. OPEC can't meet its quotas. What's going to happen with Libyan oil? What's going to happen with Iranian oil? Is there enough investment into the supply side in order to keep production rates up? The uncertainty over the energy transition, and should I be investing money in oil and gas? Should I be investing something else? I think all of that plays into this huge volatility we've got on both sides of the equation. For the Middle East, they've got this opportunity over the coming, whether it's a decade, whether it's 15, whether it's 20, who knows, in order to get that last big chunk of revenue from their oil and gas reserves before the energy transition starts to move away from the hydrocarbon markets for energy. And I don't think they're going to want to waste that. So they're going to look very hard at how they manage their production, how they manage their economies in order to get that benefit, and use those funds to transition themselves from a hydrocarbon-based economy to something else. And you can see Saudi probably leading the way in that at the moment, although Dubai has been very successful in doing it over the last few years. So I think there's a lot that people are looking at, and they're beginning to move that way.
Can we pull up the survey question, please? Because this is what we are speaking about now, and we'll speak about for probably the remainder of the session. So to get the feeling in the room, the question is, do you agree or disagree with the idea that rising geopolitical anxieties will outweigh global economic worries for the rest of the year, keeping Brent crude above $90 a barrel for the fourth quarter? Agree or disagree, please. And then I want to go to Carol again, because Carol is a fervent OPEC and OPEC Plus watcher, I know. And I want to ask you about the internal dynamics of OPEC, because we've seen some stories recently that the UAE wants to go to 5 million barrels of output much earlier than previously thought. Meanwhile, all the talk from Riyadh is of possible production cuts. There is another OPEC Plus meeting coming up on October the 5th. Will we see the stories in the past about confrontation between UAE and Saudi Arabia over, quite a fundamental bit of strategy, cut or pump? Will we see that surfacing again?
I mean, first of all, we have to distinguish between production and capacity, and also we have to distinguish in terms of time frame. So when the Saudis talking about cuts, and it has been supported by the entire group, so we saw this kind of unity within OPEC, they were focused on the next few months. They want to keep an eye on what's going on in order not to allow prices to collapse. Well, UAE talks about expanding its production capacity. They're talking about the coming years. And also don't forget that Saudi Arabia also is planning production expansion capacity for the next coming years, because the more spare capacity you have, the more power you have over the market. So that is something to distinguish. I don't see at the moment, I don't see conflict, I don't see contradiction within OPEC. Actually, they have shown impressive unity despite the problems with Russia, despite the Western powers putting pressure on certain key members within OPEC to maybe isolate Russia, but the OPEC leaders went public and they said Russia is an important player in this alliance. So in that respect, I don't see much threat to the unity in the short term. And in the long term, the key players there, they want to strengthen their position and invest more in spare capacity. And these plans, they have been announced a while ago, but they have been more accelerated, so to show greater determination. But I wouldn't worry too much about the unity at the moment.
Okay. Vibhuti, if there were such a wrangle going on within OPEC and OPEC Plus, I wonder whose side India would be on. In fact, I probably know the answer to that, because I'm sure that India would want more oil pumped. But tell me, how does India feel about the Saudi arguments that there's too much volatility in oil markets at the moment, and that we need to get physical and paper markets, back in some sort of kilter? Does India see any validity in that?
I think what I feel, Saudi Arabia is still one of the biggest importers. So definitely, we would weigh much more importance, and it is much more closer to India. So transporting oil or gas from Middle East is far more commercially better for India than, importing from far off countries like Russia. As I said earlier, till about last year, Russia imports were very, very minuscule, but yes, because of the great discounts that were offered and in order to control inflation, and India started importing more. But in the long run, I would see that, the equation again would change back. If we'll start getting more imports at a better price from Middle East, I think that would be much, much more preferred than, primarily out of commercial reasons than anything else.
Okay. Can we get the survey result, please? To see where people stand on that. Oh, wow. Okay. So the Bulls have it by some way. 86% think that we'll see above $90 a barrel for the rest of the year. That's very interesting indeed. I just want to spend the last few minutes here on the question of energy transition. And it seems to me that with all that's going on in the world, we almost seem to have lost sight of this, haven't we? We don't have so much discussion anymore about transition, about green energy, about renewables or anything else, because we're worried about day-to-day energy supplies. Vibhuti, give me your thoughts on that. Have we lost sight of the energy transition, the green transition?
Because of the recent events, I would say a lot of countries have started looking inwards, and whatever is domestically available, I think the countries want to exploit that more. And as a result, we have seen some momentum building up on exploiting more gas or coal in India, and even in Europe, reviving back of their old coal-based plants. So those kind of things are happening, but at the same time, availability of finance for such projects is going to be very, very difficult. So now we have seen a lot of financial institutions announcing coal and oil and gas exit policy. So unless it's supported from the government or have sovereign banking, we won't see a lot of finance being available for such projects. And for example, in India has also made huge ambitions for its renewable energy targets by 2030 or net zero by 2070. So India is building renewable energy capacity also in a big way. So despite giving some momentum to fossil fuel in the last few months, because of the change in crisis on account of the Russia-Ukraine war, but definitely I think there is huge emphasis for clean energy deployment as well.
Right. Walter, I'm not sure if you caught yesterday's show, but Sean said on yesterday's show that green factors and ESG factors made no difference whatsoever to policy decisions in the Middle East on investment. So have we given up in this part of the world?
No. And actually, I'm not sure I completely agree with Sean on that one, to tell you the truth. I think it is an influencing factor. Now, why do I think that? Because I think they've woken up to the fact that in a future market where there are strong green criteria in the sale of your oil, the countries that are producing low carbon emission oil will have a better market to sell to than those that are producing high carbon emission oil in the actual production of it. So I think that's something people have woken up to in this part of the world. And certainly in this country, there is a strong push around what are you doing about managing your greenhouse gas emissions that you're emitting during the production of oil. So I think the region has woken up to that. On the global scale, I think we have forgotten about the green agenda. And what's behind that? Quite simply, we're a very fickle species.
Okay.
It's great to go for a green agenda as long as it doesn't affect me. I'm still getting my energy and I'm still not having a problem. As soon as everything gets very, very expensive, then I want cheap energy. And I'd like it to be green, but I just want the energy. And we forget about that. So I think that's what's happened here. And I think as energy prices stabilize, now whether that means they stabilize at a lower price or at this price or whatever, then I think the agenda will gradually come back. I think it's a mistake to forget about it, even though the pressure isn't on at the moment, because I'm sure it will come back with a vengeance. But right now, it's not top of people's agenda.
Okay. I stand corrected by Sean Evers. He says that what he actually said was that the transition has not deterred investment into hydrocarbons in Gulf states. So there we are. You have a disclaimer read out over the air. Carol Nackley had to leave us early. She's obviously got something very important to do. But I would like to say thank you very much to Walter and Vibhuti. And I'm sure we'll speak again. Thank you very much.